So I'm the only one here at this panel who is not forecasting anything. So like we have the National Bank and two investment banks that are doing their forecasts. As a first question for the first round, we will not go into like structure details by all of all components of the macro forecast. What I propose to do, as our audience is also well informed, I have the same question to each of you, and then I will go into further details and inquiring you on the additional things. But like we have some picture for the next year. So now we are already in September. Now forecasting near-term data is sometimes even more complicated than forecasting something for the next year, because nobody knows like what state statistics service will calculate and how. So we will think about next year, and let's discuss the following. When looking on the different forecasts for your organization, what are the main like indicators, trends that your organization sees in different way from other forecasters, and what are like indicators and trends where you see the biggest risks for the next year? I think that we could also cover like end of this year to some extent, because we already like are speaking about this stabilization of economic situation, and so generally like we could speak about the period if speaking about trends, not about figures, like starting from now, from the beginning of the business season, like old-fashioned business season 2023, and then into 2024. So what is, like, for the National Bank, Volodya, I will start with you. I understand that it is to more extent like the difference that could be between opinion of the National Bank and other official forecasters, like, for example, official forecast of the Ukrainian government, but also like forecasts of IMF, World Bank, EBRD. Like, what is the difference that you see, and what are the trends that are the most important for the National Bank when you believe that you see something either differently or deeper or better than other forecasters? And then Olena and Alexander, please prepare for the same question.
Yeah, actually we just started our regular forecasting cycle, and new forecast will be in the inflation report published at the end of October. Actually at the beginning of November, yeah. And what I see differently, actually the role of the central bank as a forecaster to be somewhere in the middle of all the forecasts, to be like a focus of all the analytics. What we see currently, what is different, that we were quite pessimistic in our forecast for this year, and that we will definitely revise it upside. The main, actually there are several reasons for that. One is performance of agricultural sector because of actually good weather. So something that we are not really good at forecasting. So that will have effect mainly for the third quarter. We will have larger fiscal deficit, which is again the boost for the GDP for this year, or maybe it's for the beginning of the next year. And better situation with energy supply. So our energy system managed to avoid blackouts because we had assumption on some energy deficit for the third quarter, which will not be realized, I hope. Yeah, so we will revise the figure for this year, but that gives us little hint for the next year, because that could be the case, but with low probability that we will have even better weather than this year. So most likely the agricultural sector will be like with a negative sign for the next year. We will have higher comparative base, but at the same time we see that economy is very adaptable. So our assumption on how long will be the active hostilities is affecting our forecast less and less. So it's like it was like it will still be the main assumption of the forecast. However, it will have less significance compared to that we have previously.
So now end of hostilities is to more extent upside scenarios and upside risks than baseline scenario.
I think yes, that could be one upside risk, and in terms of other risks, we see that actually we had in our previous forecast from July the end of sea blockade somewhere in the middle of the year. But given that our military were quite successful in hitting Russian sea base and ships, so that could be one more positive risk to the forecast. Yeah, and I still we're still have a discussion of what we should do for the figure for the next year, because we have not really impressive 3.5 for the 2024, and we're still thinking about on the balance what we will have for the next year.
Maybe like one additional moment that you haven't mentioned, like when you slightly modified my question, and I believe that you modified in a very good way, like comparing not only like with your colleagues, but also comparing it in time. Like what were the changes to your forecasts? Like when we see on this unpredictability of the situation with budget deficit financing for the next year, do you still believe like in the same way as with outputs that our needs will be covered and we will not have to move into either more conservative fiscal policy and stopping all expenditures that could be cut, or like money printing? So do you still maintain like as it is scenario for the next year? Or you will wait and see till the end of October?
No. Actually, I think our baseline will be that there will be international financing available. In the recent forecast, we have 37 billion for the whole year. Maybe it could be revised upward. But for me, like situation is somewhat resembles the same situation last year when we were trying to predict the financing for the 2023, and we were quite hesitant to have a. But in reality, what we assumed almost doubled. And for me, the situation is straightforward. Like we are providing the, let's say, security service for the whole Europe, and we need to get paid.
Okay, very good. Thank you, Olena.
Yeah, thank you for the invitation, first of all, and I really envy Kyiv, who is the only one who doesn't have to forecast, because now it's a very challenging task, and not only because of the uncertainty, but also because we really observe very little of the data. We don't know really what's going on in the economy. The only regularly and quickly published sources of information are surveys of enterprises. Yeah, so that's the only thing that we can really count when we have to make some judgment about what's going on in the overall economy. And after the data published, it's only like 1/3 of the economy. And that's why, all the forecast is, we revise them often. And what we say today doesn't mean that we will say the same tomorrow. But the key thing about Ukraine's economy, I think it surprised to the upside this year, surprised many people, including myself. The reason for the surprise was, I think there were several reasons, and Vladimir mentioned some of them, like supply, shortage of energy disappeared quickly. But also what we observe currently is a increase in the propensity of consume. That's how the economists call it. In simple words, that people relaxed and allowed themselves to buy some more goods, more food, some nice thing to go on vacation. I just read today that the Bukovel actually was at 78% of its capacity, around 78% of its capacity this summer. Yeah, so that people just started spending more, and that supported the economy a lot. That's a good news, but the bad news is that there is a limit to the spending spree, and from latest indicator, it's coming to an end. So we're actually we're more optimistic than the central bank on the this year growth. We currently forecast 4.5%, and I'm more or less sure in this number. But this number just basically mostly because of the sequential growth that we observed already in the past. So in the first quarter of this year and second quarter of this year. So the third quarter, what we see now is some flattening of economic activity, except for agriculture, it will be technically higher because of the better harvest and because it's harvested earlier. And the fourth quarter will be, I think, will be tough. So we expect a decline in GDP in Q4. But anyway, thanks to this upward trend, so the overall figure will likely be strong growth. Next year, so we are above consensus. I would say significantly above consensus in terms of growth projection. But this is because we, for a long time, had an assumption that what we call security risks, they will decline early next year. Yeah. So, of course, the situation on the battlefield develops much slower than we expected. But it's still our political analyst and the person who covers the war. He thinks that the breakthrough is still possible, so that we keep this assumption unchanged, and we also count on resumption of shipment via Black Sea ports. So for next year, we expect, with all these kind of assumptions in mind, we expect growth of 8%. But if one of our assumptions is not taking place, then of course we will be talking about much smaller growth number, because the sources of improvement in the economy, they are gradually vanishing. So apart from what we discussed now, and apart from some improvement in the security situation, I think we can count probably on our military sector. Yeah. And maybe some improvement in private investment, but it will be very marginal. So, but the outlook is still very uncertain and dependent on the military first of all, but we hope for the better.
Olena, and the same question to you that I posed to Volodya on financing. Do you agree that we will be paid for the war in full?
Well, here I think that this will be a very challenging task for the central bank as well, and but for the government at first place to raise financing. Well, actually, the situation in the US is very difficult, and well, my expectations were that that the US would approve a new package for Ukraine for the fourth quarter of this year, but it has been delayed and is unlikely to be approved by the end of September as initially planned. So, and the next year is, I think, will be even more difficult. So, I think it's a right thing that the government is kind of assuming that the government plans for a big amount of money, of this 42 billion for next year, in line with this year. But I hope that they have a plan B, that if they don't raise this, that they don't ensure, not to say raise is not the correct word, if they don't ensure this 42 billion, then, well, the situation with the budget will be difficult. There are internal resources, yeah, so that we can, the government can raise domestic borrowings, but of course it cannot substitute a substantial portion of foreign money with domestic borrowings. So I would actually don't exclude the central bank will be asked to help the budget somehow next year.
Okay, don't put it. Olena, one more small question on what you said. Sorry, on the fourth quarter this year, it was rather like surprising to me to hear that you plan that GDP in fourth quarter this year will be lower real GDP than the last year.
No, it will be lower on a sequential basis.
On sequential basis.
On sequential basis.
Yeah. Okay.
Compared to the third quarter, just to clarify.
Okay. Now it's clear. Okay. So, Alexander, your turn.
Thank you. Well, I think you are not the only one who doesn't do forecast in this panel. I think everybody here is not doing forecasts actually, because forecasts should be based on some tangible numbers, but we do not have, unfortunately, any tangible numbers. Just a week ago, we got some numbers for the second quarter of 2023, and it's very hard based on these numbers, which, for example, Olena believes are not very correct, and so do I. It is very hard to prepare some forecasts. For example, the latest GDP numbers for this year implies that Ukraine has recovered in the first half of this year just by 3.3%, which is, I think it's nonsense. Numbers should be different, actually. Yes, definitely, yeah. So feelings everywhere around Ukraine is economy is growing much faster. And if so, answering to your question, where could we be different from others, I think that all of us here have pretty the same numbers for this year and for the next year, but what is different is some assumptions. First, the later we do our forecast, the better are the numbers for this year. And this is not only for Ukraine. I look at the consensus estimates for Germany and for Poland and for many other countries, and I see that the trend is the same. in January, everybody was expecting much, much weaker growth numbers for European economy, for Ukrainian economy. So if I do my forecast today, of course, numbers of GDP growth for 2023 will be much higher than numbers provided by Volodymyr, who did his forecast 2 months ago. Again, the only thing we are different in is assumptions about grain corridor, assumptions about hard commodity corridor, assumptions about security risks, blackouts, and actually, yeah, maybe the only thing we differ from the central bank is central bank doesn't have to forecast exchange rate, but we have to. Yeah, so just to announce our forecast, we expect 5.5% growth this year in real economy, and we are still very pessimistic about the next year because we do not see any clear triggers for the growth. So far we have a 2.5 growth forecast for the next year. But for example, recovery of trading of steel and iron ore could add easily 2 up to 3 percentage points to that number. Increase of budget expenditures could also bring some additional numbers. And so far, I think that the key challenge for any today's forecast is actually the end of war, because we have accustomed to the current situation. We already know how to forecast in the situation of high security risk, in the situation of huge budget expenditures, in the situation of enormous supply of international financial assistance. But I'm afraid that we cannot right now to assess how the situation will change if we suddenly win. Because really...
Which is the least problem.
Yeah. So because really it could change everything, and not necessarily it could change everything for better, at least in the very short term.
Okay, now we could go 2 ways. Like the first way is that I will ask you to ask questions, and if I could see a lot of hands now, I will go with this scenario. Or another scenario is like me continuing to ask questions, but in this case I need, in any case, more feedback from you, whether you want to talk more about real economy or to talk more about like inflation, budget, deficit, monetary policy, etc. So testing the first scenario, are there any questions to panelists already? If there are any, please raise your hands. Okay, we have 1 hand. It's a problem because if there was 0 hands, it could be easier, or if there are like 3 hands, it is also easier. Like 1 hand. Okay. If you already have a microphone, so please.
Yeah, thank you very much. Thank you, speakers, for coming to us today. I have a question to Olena. You mentioned a difficult political situation in the US, and given the president election in the following year, you mentioned that we cannot ensure all the necessary funding. In that case, can you please elaborate on the key indicators like inflation, GDP growth, and exchange rate in this scenario? Thank you.
Very good question. Thank you. I wanted to ask it myself, but decided to
You were late.
to abstain.
Yeah, it's a really good question, but I unfortunately don't have a good answer to you because we stay optimistic. Yeah? So our best case scenario assumes that there will be sufficient financing, and all our numbers assume that there will be no deficit monetization by the central bank, that there will be sufficient foreign inflows to cover the budget deficit. So that's kind of a risk scenario. If you don't get the money, there will be a risk scenario, and the key consequences in this risk scenario, I think that actually there is very little room in the budget to cut spending. So basically, there will be the first compensator for insufficient foreign aid is domestic borrowings, as I see it. I also see a lot of room to improve the tax collection, but well, being an optimist but also a realist, I think that these measures will not be implemented. So the basically closing loopholes over short periods of time is very unlikely to happen. So that means that the government will have to pay high interest rate on the on domestic debt, and also probably some banks will be asked to help the budget first of all, and if this will not be sufficient, then as I said, there is a risk that the central bank will need to renew the money printing. So of course it will be kind of a measure of last resort. But when there will be a question between what to do to pay to our soldiers or buy some munition or monetize the budget deficit, I think that actually the first option will win.
Olena, I have a question based on this to you and also to Volodya. In this scenario, if for this reason national bank have to start again money printing, in your opinion, what will be the impact on the real economy, on the real GDP? Like, for example, if you have +8 in your base scenario, do you see any tangible impact on the economic growth, at least for the perspective of the next year? If, for example, in summer 2024, National Bank finds itself in the situation the same as in summer 2022.
Well, the key if you look at the next round of consequences, the key risk from deficit monetization is financial instability. Yeah? So, but this doesn't mean that, so the central bank started helping the budget and next day we have like a financial crisis. Doesn't work like this. So it very much depends on actually how much money the central bank will print, if it will does it at all. What will be the the situation on the FX market, what will be the situation with exports, for instance. Maybe the exports will be good, and despite this money printing, if it is in small volume, then there will be no consequences at all. But the risk will be there, so the overall kind of resilience of the financial system will be lower, and at some point we may most likely will see consequences for the currency, so there will be kind of a risk for of devaluation and then inflation. Usually in such situation, stable situation, people tend to spend less. Yeah, companies are the visibility is low for companies, and they prefer not to do anything at all, just to sit on their pile of cash and do nothing. So of course it will be negative consequences for the economy, but again, it doesn't mean that we will be in the financial crisis, I think. So, so the limited money printing, so maybe we will pass through it without major negative consequences.
Okay, Volodya, what is your opinion? Do you agree?
Actually, the baseline that we will have sufficient resources for the budget. We still have options like in activization of domestic debt market, that quite reliable source of financing. Of course, it's not unlimited, but it's still available. And of course, the monetization is the measure of last resort, so it's surely not a baseline. And in the case of this realization of this risk, there are a lot of non-linearities. Depends on currently, like we don't need to use this measure, but in what shape our current system is that we have quite high volume of international reserves. The situation on the FX market is quite balanced. And actually that gives some room for maneuver. But of course it's not like a baseline again. So that's definitely the measure of last resort.
Okay. So any other questions now? Yeah, please.
Yeah, I have a question for Lena. CMB says in the interview to Forbes Ukraine that they need around 17 billion UA hryvnias to end building their object. Will Ukraine repeat Chinese experience with Evergrande, and how this will affect on our economy?
Sorry, can you please repeat the question?
Yeah. Will Ukraine repeat Chinese experience with Evergrande, and how this will affect on our economy?
Chinese experience?
Yeah. No, because Kyiv Minsk would have big problems with financial problems.
Massive bankruptcy of all developers, excluding Dragon.
Well, as someone someone said, there is very little of good things that we can learn from China. Yeah, so I hope that we will not go this way. And to be honest, I'm not a very big specialist in the Chinese economy, but yeah, the way they manage the economy, I think it's not the way we can afford at all, and the way we will follow. So there's an absolutely different economic setup. So we are price takers on the global commodity markets. We are much smaller. We are not, fortunately, we are a democracy, not an autocracy. So yeah, I see very little possibility or probability that we will go this way.
But like, if you interpret this question as risks for the property market, for developers, do you see this risk that there will be like some bankruptcies on the Ukraine, in Ukraine,
given the current situation?
Yeah.
Well, sorry.
Regardless of Chinese.
Well, I don't really, I can't really answer because
Volodya,
I don't follow the market.
maybe you could, like, I see that Alexander has some comment, but I know that National Bank also analyze financial risks in construction sector. Like, if you have any comment to add to what Alexander wants to say, please follow.
Well, I think that Chinese real estate market is not comparable to Ukrainian because of the size of Ukrainian real estate market or development market. It is very, very small actually. We have a very small portion of mortgage loans in banking portfolio. We have very, very small share of loans of our real estate companies in banking portfolio, so we do not see any problems. Of course, because of war, we see that non-performing loans increased significantly last year, but that won't make any like domino effect because first of all, banks more than covered these losses that they generated through writing off of bad loans, like from provisioning of their loan portfolio. So there will be no consequences on bankruptcy or any big developer in Ukraine.
Thank you.
Actually, the situation in China with this property market is so unique, so I don't think there could be any like resemblance of for Ukraine, because I don't think at the stage at which our market is, there could be some material risks for financial stability, for GDP, or
please don't put it back. I was recently at the meeting of CEO Club members, and they surprised me with the following question, and I think that maybe like somebody in the audience also has it. Do you see any risk of any global financial instability? Not our local financial instability because of our local issues like war, regional issues, but do you see any risk coming from abroad, coming from the global economy for the next year, for example?
Actually, we saw, for the global like, developments, it could be some risks, because if you are pumping a lot of money into the economy, then you have high inflation, then you need to fight it, and then some risk rise because for financial stability, because you're so becoming so aggressive. So that's always like you're walking on the edge. But luckily, not actually that's a lucky situation, but we are not in the position to to suffer from this, because we are so unique and isolated situation. Then we there will be a little transmission of this global instability into our economy, except like a willingness and to offer us financial help. But I think it's somehow different from economic reasons, but mainly political. So I don't think that, because for commodity markets, I don't think there is much risk for us, because our prices for export are at lower levels, our imports are vice versa on high levels, so that could be even some benign developments for us.
Olen, Alexander, do you have any comments on it?
Well, I agree with Volodymyr that our financial system is fully isolated from the global financial system. Unlike in the year 2009, when we had free flow of capital and we had a huge pile of speculative capital inside Ukraine, and when the financial crisis started, all that capital has fled in a couple of months, and that created a financial crisis inside Ukraine. So what are links between Ukrainian system or Ukrainian economy and global economy is only trading. Like as Volodymyr said, it's commodity trading, and unfortunately we already have consequences of weak soft commodity prices. Because last year when wheat and corn prices were high, everybody was pushing the grain corridor. Now prices are 40% lower than the last year, and everybody has forgotten about this grain corridor, and we have to do it by ourselves, and that's a sad reality. Nobody wants Ukrainian grain right now, and we have to export it by ourselves. And hopefully we will do export of steel by ourselves, and everything will be even better. Yes, there is some, for example, risk that steel prices will go down, but today it's not the risk for us, because steel sector is very, very low.
Thank you. Okay, so you were the first, I believe. Next.
So I'll ask the question I'm sure everybody wants to ask. The question to Alexander and Elena, what are your expectations on the exchange rate? Yeah.
Why not Volodymyr?
Yeah, and the question to all speakers, do you expect the liberalization of foreign exchange, liberalization of foreign exchange rate or policy, and what exactly do you expect if yes? Thank you.
Thank you.
So I think that everybody is anticipating some steps from the central bank to do some liberalization, but I cannot understand this panic related to such expectations, because if central bank says, okay, today we are not fixing the exchange rate, it actually won't change anything, because there are still a lot of restricting measures on capital flow. Actually, this won't change anything, and moreover, I believe that it won't change the official rate, because, to be honest, the official rate is fully controlled by the central bank. I believe that with such reserves, a central bank can write on USD 3 zups every day on this exchange curve easily. So far we have a positive inflow of foreign currency, and actually there are yesterday some top politician or top guy said that it could be good that hryvnia develops half hryvnia per dollar or something like that, but actually that won't change anything. So central bank does control the exchange rate. There are no reasons to devalue hryvnia. If we, for example, see at the difference between inflation in the United States and in Ukraine since beginning of war, so actually, if we put the starting point February 26, February 24, if hryvnia would follow the inflation difference, we would see the exchange rate 34 hryvnia per dollar. So there is no accumulated inflation that could explain even 36.6. Of course, the only thing that can pressure and will pressure and is pressuring on hryvnia is our negative, deeply negative trade balance. It's on average $3 billion per month, and this is something new for Ukraine, because before that we have more or less balanced trade. But this balance won't be, this deficit won't be improved by any reasonable exchange rate. So I don't see any logical reasons for dollar to appreciate once central bank is doing something with liberalization. But of course, the expectations of Ukrainians, they I think are very close to panic. We were observing such panic in May 2022 when there were talks on some possible liberalization, and we do observe some sort of panic right now, but fundamentally I do not see any reasons for any visible devaluation by the end of this year.
Thank you. Elena?
Yeah, so finally this question on the exchange rate, I was expecting it from the very beginning. Okay, so I think that the NBU is clearly communicates their future steps. Yeah, so and that's very important in this environment. And I read with pleasure. I think that was your explainer from yesterday. Yeah, so that on the website there is a big text what flexible exchange rate means, how the NBU is going to proceed to it, what are the steps in relaxing the FX controls. So it's all very clear. The only thing that is unclear is timing. Yeah, so and we all all our forecasts I think differ only on the timing on when the central bank will find sufficient conditions to move to to introduce more flexibility. So I would say that I don't know how to translate it in English. It's керований курс. Okay, heavily managed exchange rate. I agree with Alexander that not much will actually change, at least in the first months after this change in the policy. But over time, still, I think that the fundamental, which is a very big trade deficit, justifies some small or moderate devaluation. So, but that's my forecast for the next year. The average exchange rate is 38.2. So it's not much different from today. So the end period it could be a bit lower, but well, it's. I think the NBU will really have to balance between this fundamental need to a little bit devalue and also the impact of the devaluation on the expectations on inflation and the overall economy. But the bottom line is that there will be a very smooth transition to a new regime. There will be no shocks. Because there is sufficient reserves, as you may have heard, this year during the war, the central bank reserves hit a record high since independence. So it was very difficult to believe at the end of last year, even in the July last year, when we were approaching like 20 billion, when reserves were approaching 20 billion US dollars, that they will be at some point at above 40, and nobody expected this. So, but the situation is as it is now. So reserves are high, and there is sufficient. They are sufficient to really to withstand a lot of pressure if they appear. And the FX controls, of course, will be liberalized very gradually.
And now I will reformulate this question for Volodymyr, for it to be answerable by the NBU official. Going back to this first round of questions and to risks related to financing of Ukrainian budget deficit. Months, especially 2 months ago, NBU communication was rather positive about reintroduction of floating exchange rate and that we are assessing conditions, etc. But it looked practically inevitable. Reserves were on maximum, and expectations for funding for 2024 or for victory were rather high. Now, for example, if you see as Monetary Policy Committee, as NBU board, that this unpredictability lingers and continues, and for example, by the end of this year, you will not still have significant share of funding committed for the next year. Will you still plan going to floating exchange rate, or you will maintain status quo, in your opinion?
Actually, there is a need for some clarification in terminology, because what is in our strategy that we are going to shift to flexible exchange rate, which is not floating exchange rate.
Flexible. I
Yeah,
could not.
Sorry.
Like I am not so used to communicate this in English. Sorry, I meant flexible.
Yeah. Colleagues rightfully said that it actually will be managed flexibility. There will be some flexibility in the system, but it doesn't mean that NBU will allow to FX market to balance itself. It's we will still be managing the exchange rate. We will be still on the market, and our goal, and actually why we have all these preconditions which are prescribed in strategy, is that shifting to this flexibility should not create any shocks. So that should be manageable process. We are quite good in creating the environment in which that is possible, but we are still want to have like strong signs of this that this transition will be smooth. I could not say about the timing because like when we will be we will see enough and strong preconditions to that we are going to this add some flexibility into the exchange rate dynamics. And it's difficult to say. Actually, we were living in a quite unpredictable environment, so there is no like some particular risks that we could assess and that we could to guide us. Anyway, that is conditional on a lot of factors, and our goal is to make sure that the transition will be quite smooth, and after this transition, that still the exchange rate will be the nominal anchor for the economy, which means that we will still need it as some guidance for expectations, for non-intensification of risks to the monetary stability. So still, exchange rate will play this role. So I could not say whether, depending on timing, whether some risk will be intensified. We're still living in highly risky environment, and all this exercise with moving to flexibility is just to add to the economy some buffer from the shocks. At some point, exchange rate will play this role, not at the initial stage. Initial stage of this transition still will be that exchange rate should be not stable, but exchange rate sustainability will be the guidance for us.
Okay, clear. So next question, it was, yeah.
I am thankful for those panelists who expresses the numbers of some numbers on GDP growth for the next year, and it looks like some of you are quite more optimistic and the others are more pessimistic on the growth in 2024. So, and like to move the economy from the stalemate, we need some investments, especially foreign direct investments. Recently, what I remind, like Ukraine Institute for Future expressed some thoughts on the level of the foreign direct investments to the GDP, and they were quite realistic in their estimates. So I would like to ask all three of you, so what are the expectations of the foreign direct investments to GDP in your forecasts for the 2024, at least?
Thank you. Who will be the first, if any?
So honestly, we ignore this number because it's not meaningless. So it's like a statistical error, I would say.
Till the victory. Until the victory. Or after the victory as well. Or it depends on the victory.
For the year 2024.
Okay, good. Olena.
Yeah, well, I think we really don't count on any substantial foreign investment, even during the, I would say, first year after our victory. I think it will take time for the foreign investors to, well, there will be an inflow of people who will be here to see where they can put their money if we really get the security guarantees, if the victory will be accompanied by the security guarantee, credible security guarantees. But without, without these two conditions, victory and guarantees, it's very hard to expect any visible foreign inflows, investment inflows.
Yeah, totally agree. And the only guarantee for Ukraine, like if we are not talking about like insurance, the only guarantee is NATO accession, and this is not the question of the next couple of years, as I understand.
Good, Volodya.
Actually, I could not agree more. Like, to be on the positive note, I would say that it's an upside risk to our forecast, like any number of FDIs into Ukraine.
Super. Okay. Two questions here, you and you.
Thank you. Factually, continue on this topic about the investment, about the source, about domestic source for investment. So today we have quite a huge liquidity in the banking system. And also we have, what I see is that we have a lot of cash in the balances of corporates. Factually, it's coming from corporates. It's also coming from private individuals, but mainly from corporates. So corporates have resources to invest. So will, under your base scenario, corporates invest? What will be with liquidity in general? So maybe these funds will go to, I don't know, to finance the budget deficit, for example, if it will be high and we will need like a domestic resource to finance this one. And also what probably government can do, what is realistically government can do, like to try to stimulate these investments. I don't know, maybe war insurance actually. From the government side, not from the side of we are members of NATO, but if we see that the war goes on, can maybe some government insurance, war insurance can be issued for the new investments. What can be these ways? Thank you.
Thank you. Volodya should be the first.
Okay. So of course we see the surveys of enterprises. They're quite positive, like in expecting that they will increase investments. But still the number is not something that which is in our forecast. It's not something that could deliver some breakthrough, like the investment-led growth. In terms of banking system liquidity, it will not go anywhere. So it's something that's locked inside the banking system. And if we will, it's by the nature of two-tier banking system. It could not go anywhere. So it will be just, if in the baseline, it will be just be increasing as a reflection of that the government is spending funds which from international help, which is exchanging in the national bank. So it appears in the accounts of banks as well as in the accounts of corporates and households. So yeah, we see like record high levels of cash on accounts of corporates. And actually that's this like reverse process of that they don't actually, successful companies, they don't need loans. So that's why we have sluggish, like they just don't need it. So yeah, there is some, banks are ready to provide loans, but they want to provide it for some reliable creditors which are not actually borrowers which are not actually need them. So that's yeah. So as Elena said, to see some intensification, we need like security guarantees, some security insurance, and so on.
Elena.
Yeah, I think that war insurance may become a game changer, but I think it will not become a game changer. So there is I talked about this war insurance to many people abroad, and so far the conclusion is that it's kind of, though the global system is not ready to Ukraine's scale. So basically there is not enough money, So all the insurance, all the organizations that are provide those insurance, they are not ready to put their own money. They don't have this mandate to cover such a big risk. They are looking for donor money, like they are looking for money from EBRD, for instance, or like from Japanese government. And for Ukraine, probably it's better to use this loans or financing for kind of for the budget or for gas purchases or something like this. So there is a competition for a very small amount, relatively small amount of money. And another point is that the procedures are not also will not fit Ukraine, so that well, one company from our portfolio got a war insurance. We were first actually in Ukraine to get a war insurance. It took us almost a year. And given that that we know how to work with international companies, we passed the due diligence by EBRD, so this project also has EBRD financing. But despite the fact that EBRD did all the due diligences, MEGA did it again. So that it will not work like this. Maybe the global players will sit together and decide we really need a radical change, and then we need to provide Ukraine with a sufficient amount of kind of money for this war insurance, and we'll simplify the procedures, but I really don't believe in this scenario. So I think it's, well, it may have changed the situation, but I think it will not change the situation, unfortunately.
Alexander?
If I'm not mistaken, it's about $40 billion equivalent of corporate accounts in banks. This is actually not a big amount. I think half of this amount, around $20 billion equivalent, is working capital, and about 10 billion, it's my rough estimate, is money ready to be taken abroad once Volodymyr and his colleagues allow it. So what is left is roughly 10, this is my rough estimate, yeah, but what is left is 10 billion of potentially ready to invest money. If we are talking about like possible structure of investments, let's say it will be like debt to equity, let's say 3, yeah? So we have 10 like potential equity investments, and to put, very theoretically, if we have very good and very good creditors who like Ukraine, they can provide us additionally, let's say, $30 billion. So $40 billion is what Ukrainian business can raise for investments, like for all the years in the future. This cannot be comparable to like numbers what we are hearing from the president office, like 400 billion or something like that. So we have a theoretical potential of $40 billion of investments, like local investments. We can theoretically assume that, so in the best years we have 10 billion of FDI per year. So we can calculate how long it will take for us to spend 400 billion for investments. I think it will take like a couple of decades.
Good. Okay. So your question, and I believe this one will be the last, as we will have to finish by 2030.
So thank you very much, panelists, for great discussion. And all of you have your baseline, which is quite similar for this year and somewhat realistic for the next year. But I'm wondering, what do you see, what is your observation about expectations of business? So we see that, as Elena has said consumption has grown due to better expectations, some optimism, and do you see some optimistic behavior from the corporate side, or do they actually believe more in negative scenario and behave like hedging against negative scenario? What are the what do they say in conversation with your companies, and what they really do with their money, which should say something about their expectations about future?
Thank you. I will start with Olena and Alexander, but Volodya, I will ask you to comment also not only for survey that you are communicating a lot, but like you have much more data on behavior of customers of the banking system. So maybe like you see any trend from it as well. So, Olena.
Well, I would say the general mood that everyone is still very cautious. Yeah, so we're not ready to really to put substantial amount of money at work. So that's what we discussed just before. That well, there is no. I would say there is no appetite to invest because of the still very high uncertainty. That's what we see from the survey. So the companies increase the utilization of their existing capacities, but very few of them think about any expansion of the production capacities, at least at the moment.
It's interesting, in fact, you said at the beginning about like growing propensity to consume, but like you speak about no propensity to invest, and in fact, it like to some extent it could help in like increasing capacity utilization within Ukraine, especially like in service sector, etc. But then it could result in growing imports.
Yeah, we actually do see the increase in consumer imports as well. So it's both. It cannot work differently. So it both supports the economy through kind of increased production, but it also fuels imports.
Yeah, Alexander.
Well, totally agree with Olena. Our business is not ready to spend the last money for investments. They are much more cautious, so they, let's say, they are ready to invest, but they are always looking for, first, they would be happy to have some insurance, which is unfortunately not yet available, and they are very, very happy to see some partners who will share their risks. Let's say if a couple of years ago our businesses were ready to invest by themselves and put their equity into the project and even were not seeking for debt financing, now as I see, like 25, maximum 30% of own money they are ready to invest in any project.
Volodya.
Actually what we see is that every sector is quite optimistic about the future investment, except, I think, if I'm not mistaken, construction, which is strange for me, because what we see for actual data that they are quite good in terms of statistics. We see as well underutilization of capacity for actually every sector, but still they are quite optimistic. And consumers are optimistic. Like record high import of BMWs is something that is quite unusual for a country at war.
There are already insurance products like Casca that includes risk of being destroyed by falling shahed. Olena, you wanted no? Okay. So, I believe the final question, if nobody will be jumping with another final one. Yeah, please.
Which sector of economy can survive and remain attractive if there is a 10 years war?
It's not very pessimistic. Like if you read like different comments and Facebook posts, like many people speak that this war will be forever, because like we have imperialistic neighbor who will never leave us alone. But like we will start with more optimistic scenario, just 10 years old.
Only 10 years, yeah.
Only 10 years.
Yeah, it very much depends what you mean by the kind of this war lasting for 10 years. Is it same scale as it is now, or is it kind of expanding, or is it reducing but still like slow fighting or something similar that we had between these two waves of aggression? So, but generally, I think that many sectors adjusted to the new reality, and we see that actually some companies, well, their financial results are better than before the war. Some of them really post record high EBITDA. So they like it's not like that they really it's not like it will be forever. Yeah, so it's sustainable, but. Well, I think that food production is always a kind of a sector that is basic and that always does well in all circumstances because people just need to eat. Well, so I would say that agriculture and food processing will be here and will be operating and will be earning money. Apart from that, well, I don't know, pretty much all sectors, maybe the energy, of course, it's at risk, but well, I don't see the major kind of sector that will be significant, that will disappear, for instance, compared to the today's situation.
Alexander and then Volodya.
Well, so let's avoid black humor sectors. Actually, the sectors that will definitely benefit in such situation are those which could first of all benefit from substitution of Russian, like past Russian imports. There is huge potential in construction materials and other sectors. For example, there are some consumer goods niches which benefit because of absence of Russian competition here. Definitely sectors which will be focused on exporting of processed goods, especially processed agricultural goods, because this will be definitely in high demand. And some specific sectors, like for example local tourism, because of obvious reasons, it will be also doing very well.
Volodya.
It's like a matter of your perception of the situation, because I recently spoke to central banker from Bahamas, and he told we know that every year there will be hurricane, it will destroy everything, but we managed to quickly rebuild it, so we don't care. I think we will have in this scenario something similar to that. Anyway, economy is adapting. I doubt that there will be a crowds of foreign tourists in this case, but everything else will be not in a benign situation, of course, but somehow survive.
Yeah, thank you. I have very specific investment advice. I just read it in the news, coming from what Alexander said. glass, like we have deficit of glass and for windows and
Yes, because all the glass was imported from Russia. Yeah.
from Belarus, yeah, and still
Belarus,
imported,
yeah.
in fact, from Belarus via Poland. So with drone war, like glass losses are unavoidable, and we have winter, so glass will be needed. So even before food, you will need some glass. So food and glass.
And definitely everything which is related to defense.
Yeah. Okay, so thank you to my colleagues for very insightful answers and your daily work in trying to analyze non-existent data. And this Sunday we will have like our NGO meeting with IMF mission to Ukraine. So I just put into my notebook to advocate for introduction of new structural benchmark, like making changes to the law that will restart collection of statistics, because like it is impossible to live in without statistics. And thank you to everybody here, to the CFA Society for organizing it, for having this wonderful community. And then I understand this community will continue eating something tasty and drinking something tasty as well. Thank you. Thank you.